Hi, you guys. Welcome back to the channel. This is the Firefighter's Financial Toolbox. My name is Brad, and happy 2020. One of the things we talked about in a video I made about a week ago was things to think about for the new year. Today we're going to talk about something that I think is pretty important, tax withholding. Now, I realize most of the stuff I do on this channel is for investing, but here's the thing. If you get your taxation right on your W-4, it's going to provide you with more income through the year to help you have more money to invest. It's also going to keep you from having a big whammy of a tax bill at the end of the year because you withheld. Now, I realize, as I've talked before, there are a lot of people out there that like to have a big tax refund. I get it. You save up, maybe you take a vacation with it, maybe you buy a new big screen TV. But here's the thing. You're giving the IRS a interest-free loan for a whole year. Don't do that. They don't give you money. Don't give them free money. All right. If you're new to the channel, think about subscribing. It really helps me out. If you enjoy this video, give me a like, and we'll get into it. So we're on the irs.gov webpage. If you just Google tax withholding estimator, tax withholding calculator, something like that, it's going to come up. The actual website is apps.irs.gov/apps/tax withholding estimator /adjustment. So trying to remember that's a lot. Just Google tax withholding estimator and then find the page that says irs.gov and you're going to be there. All right. So first thing you're going to do, first couple things you want to have is you want to have your most recent pay stub. It's going to have the amount of taxes that they withheld for you on the last paycheck, and that will give an idea of where you need to go from there. Now I'm going to do two examples. According to my analytics page on my YouTube studio, my biggest target audience is 45 to 54-year-olds, which is my age group. So I appreciate you guys out there in my age group that are getting your finances in order. But the second group that we have is 25 to 35. And so the first one I want to do is a simple 25-year-old just out of college, let's say first job, single person. So about you. Okay, first thing it's going to ask is your filing status. So let's say we're single, and can anyone else claim you as a dependent? No. Now, if your parents can still claim you, kids, you can't do this. It'll come out different. Do you plan to claim any dependents on your tax return? So let's say you're not married, you don't have any kids. No. Do you or will you hold a job this year with paychecks? Yes. How many jobs do you expect to hold this year? Include jobs you no longer hold. So if it's middle of the year and you've already had a job, make sure you add that. So I'm going to say, make it easy. We're going to have one job, I hope. Will you receive income from a pension? No, because we're 25. We don't have one. Check all others. Are you going to receive Social Security benefits? No. A scholarship, grant? Nope. Unemployment compensation? Let's say no. Net income from self-employment? Let's say we don't have any income from dividends or interest, and we haven't paid any. Let's say we don't have any other ones. All right. And we're not blind, and we won't be 65. All right. Do you expect to hold this job the entire year? Yes, I hope so. How frequently are you paid? Now, let's say we get paid twice monthly. Okay, so let's say our last paycheck was 12/31/2019. And let's say the total wages we expect to make this year are $36,000. Okay. Enter any bonuses. Have you received any bonuses? No. Do you expect to? Probably not. All right. So let's say from our last check, they took, let's say the feds, they took $100. Now, again, I don't have a paycheck to use for an example, but let's put those in. Did you or will you contribute to tax-deferred retirement plans such as a 401k? So let's say for this instance that your company matches 5% of your income and you're a good young person who wants to save. So 5% of 36,000 would be 1,300. So let's say you're going to contribute that, okay? So yes, and let's say it's $1,300, which is enough to get your match, right? Did you or will you contribute to an HSA? Let's say Let's say you're being really good, you know it's good, and we're going to give $1,000 to the HSA as well, you guys. All right? Next. Do you want to have the next step, including adjustments, to see if possible? Let's see what the adjustments are. All right, student loan interest deduction. Do you have student loan debt? You're 25, you probably do. So let's say the max deduction is $2,500. Let's say you expect, based on last year's, you think you'll get $1,000 for that. All right. Health savings account, that's outside the payroll deductions. Moving, that doesn't exist anymore. Okay. That's the only one we think we got. All right. Do you think we're going to itemize or take the standard deduction? Now, for most people, the standard deduction is going to be that, because if we look at the standard deduction now, the standard deduction for a single person is now $12,200. So you would have to have more itemized deductions than $12,200, or you're probably not going to itemize. So let's say we're going to take the standard deduction. All right. Now, tax credits. Would you like to see if, let's see if we get any. All right. No, it doesn't look like we get any. So what it looks like is with this, we have a slight overpayment of $58. Going to get a little bit of a refund. So you guys, for me, that's pretty cool. If I can get that to a perfect zero, it's the ultimate in tax preparation for me. Now, within a couple $100 either way, I'm fine. I'm not going to adjust it. But you can see that you could adjust this just a little bit and get that perfectly where you want it to be. Right? So let's go ahead and go back to page 1. Okay, this time we're going to do it for somebody in my age group. Let's say we're a 50-year-old. So we're married, filed jointly. No one else can claim me on their return. My son is old enough that we are not going to claim him any longer. Do you or your spouse hold a job this year with paychecks? Yes, my wife works as well. How many jobs do you expect to hold this year? I expect to have just my firefighting job. And my wife, I expect her to have just one job. Neither of us have a pension yet. Now, we come down here, we do actually receive some unearned income such as dividend, interest, and annuities. So let's say between my dividend stocks and the interest in my savings account, well, if they're going to ask us later, I will have that. I won't be 65 myself. My wife won't be. I'm not blind, and neither is my wife. So we keep going. Do you expect to hold this job the entire year? Yes. How frequently are you paid? I am paid twice monthly. On what date did your most recent paycheck go? 12/31/2019. I expect to get 80,000. I don't get any bonuses. I don't expect any. My last check, they took $250. Did you or will you contribute to a tax-deferred plan? Yes. How much? Now, this year I plan to put in $2,600, $500. Max it out. Yes, I did, and that was $2,700. My spouse's job. Yes, we expect her to have it all year. She is paid bi-weekly. And her last check was on 01/03/2020. And she makes $50,000. She has no bonus she expects. Her employer does. She does get bonuses from time to time. It depends on how they're doing. So I'm going to leave that blank, but they will appropriately tax the bonus check, so I'm not going to worry about that. So using her last year-to-date statement, she's made $2,000. And on her last check, they took $95 in taxes. Oh, sorry. $95 in taxes. Yes, she contributes. She is going $26,500 as well. Does your she does not? Oh wait, sorry, she does not. I do that myself. Okay. Do you want to see the next step? We've already seen the adjustments, and I know that we don't have any, so I'm going to go on to the next step. We also take the standard deduction now because it actually is higher than we can. And let's see if I can get any tax credits. I don't think I can, but let's try anyway. Okay, it shows that I'm overpaying as well. So now part of that is, I think, because when they figured out my wife's, they based it on her doing $26,500. Now she's doing it Roth, so they actually tax higher than that. And it's really hard to say for sure. Remember, you guys, if you expect overtime when you do this, if you know that you're going to have some overtime, base it on your base salary. Whatever your hourly rate is times the hours in the year, or if you make an annual salary like I do, base it on that. Remember, when you get overtime, it's generally taxed at a higher rate anyway, and your HR or your payroll department should take care of that on their own. I know for a fact that this is incorrect for my personal status. I usually owe a little bit. But anyway, it gives you an example of where you're at, and you can adjust it by changing the numbers a little bit. You can get it to where you have the correct numbers you want, and it will help you. When you come down here, you'll see that it says the thing. You can print this out. You can take it into your HR, to your payroll department, and make sure that they can help you when you go to fill out your W-4. You'll know exactly what kind of adjustments or how many you need to claim for that. It is different than it was a couple of years ago as far as how you fill that out. But it's a pretty good way for you to determine your best guess so that you don't have either too little or too much tax taken out. And I think that's really important. One thing I did want to show really fast was the tax brackets for this year. If you look at single filers, up to 10% if you make $9,700 or less. If you're married, that goes up to $19,400. The top of the 12% for singles is $39,475. If you're married filing jointly, it is $78,950. The 22% bracket, which is where I am, the top of that for singles is $84,200, and if you're married filing jointly, it's gone up to $168,400. The top of the 24 for singles is $160,725, where if you're married, it's gone up to $321,450. Above that are the 32, the 35, and the 37, and those are for basically people, singles making over $200,000 and married making over $400,000. As you can see, the standard deduction for singles is $12,200. For standard deduction, married filing jointly is $24,400. You notice here, personal exemptions have been eliminated, so it changes how your taxation is when you do your 1040 at the end of the year, you guys. Anyway, I think it's real important that you take the time and look at these things so you can make the best decision, and you can maximize the amount of money that you're getting in your paycheck without under or overpaying the government in taxes. Anyway, I hope you got something out of this. If you did, like I said, give me the thumbs up. If you're not subscribed already, please subscribe. It really helps me out, and we'll see you again. Thanks.